Thanks, everybody. It is December 24th, 2017, 1:10 p.m., and this is my weekend review. Tax cuts pass, Bitcoin bubble bursts, and major markets pause. Let's take a look at the week that was and try and figure out where we might be going in the coming week. Seeing that it's Sunday at 1 o'clock on a long weekend, there are no futures out to review. Happy holidays to everybody. Hanukkah is past, and based upon the date, Christmas is here. So Merry Christmas to those that celebrate. Disclaimer, this is for education purposes only. Any recommendation in the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. No one pays me to say good or bad things about anything. Trading involves risk. You and you alone are solely responsible for any decisions that you make. When I did my seminar, I called it Be Your Own Guru, and I do believe it's important that you learn from folks that you think know what they're doing, and then you put together your own trading strategy and plan based upon an amalgamation or a synthesis of of your style based upon things that you've been exposed to. I don't claim to have created the wheel. I've just tried to revise it based upon the learnings of Cancelim, John Person, and others. I own a lot of programs. Actually, I've seen my purchasing of programs slow down. Some cynics may say it's because I already own everything, and others might say it's because maybe I'm figuring out which ones actually work, and I'm spending most of my time on those programs and not chasing the Holy Grail. I need TradeStation or Thinkorswim. We'll see both tonight. HGSI is my favorite for analysis. EdgeRater is a additional analytic tool that I like. I do use seasonality in a number of websites. Again, I am independent of HGSI or highgrowthstock.com, but I just want to point out, as always, a free 30-day trial, and that under investing strategies, you'll see hundreds of videos from myself, Ron Brown, and others. Stock patterns are cyclical. It's easy when you have a green circle and you're convinced you're coming out of a long base and going up. It's also pretty good when you got the red circle and you feel you're going down and you have a trending market. We've been trending for a long time, but we keep getting whipsawed where it looks like we're rolling over and then we go up to the next leg higher. I say that every week. Nothing has changed. And therefore, I seem to be playing in different buckets as far as my level of all in or not. I'm pretty invested right now, but I did lighten up some this past week and take profits on a couple of positions. If I look at the sector review on Friday, banks were up on the week. I have one of my larger positions is Bank of America, and it's getting up to close to 30. And interest rates did turn up. Energy was also strong, although Friday it weakened some, and this is not a strong period for oil typically. Staples look better than discretionary. Retail's had some winners of late, although it didn't look so hot on Friday. Healthcare, not strong. Transports picked up, especially some truckers with the XPO logistics in play to perhaps Home Depot. Gold miners look strong on Friday. And you can see weakness in casinos and some of the social media plays. If I look at major markets, let's just go and look at the charts themselves. Come on. Here's the E-minis, lower left, upper right. Price is above the 17, which is above the 50 and above the 200. You could see volume eased up as we ended up on the week. We pull back, sort of a flag formation. It would be natural to expect it to come down and touch the 17-day, and we'll see if we get there. OBV remains strong. NASDAQ, similar picture with a flag after a run-up, as does the YM, kind of a flat, less of a pullback than the others. The Russell, which has had some of the biggest movements, also flagging after a gap up to start the week. What's been low has been the VIX, and the VIX really struggles to get above this 200-day moving average. of which it had a couple of positive moves during the week, but it still closed well below the 200-day. And the U.S. dollar struggling to stay afloat here. If we switch to weekly charts, what was outstanding to me was the fact that we hit weekly highs of all time on the E-minis, doji forming at the top, the NASDAQ with the doji forming, the Dow, kind of a doji, IWM, and you could see a up week on the VIX while the dollar continues to struggle around this 200 weekly day moving average. So a lot of indecision as this week ended. Perhaps there was some relief because the tax bill's done, and then on Thursday, I think we saw signing the Keep the Government Afloat deal. Did anybody actually think Congress would not have signed it so they'd have to stay and miss Christmas at home? That was sort of a no-brainer. Sometimes I just like to superimpose in columns the E-minis, the TFs, the NQs. Sometimes I mix those two up. I'm just looking. And then we've got the IWM, the NYSE and the YMs. And, the thing here that's most outstanding daily, weekly, and monthly is everything is in an uptrend and in a strong uptrend. It's been a strong market. This must be the TFs. This is when's been the most funky with pullbacks. But the markets are strong, period. They've been strong. They remain strong. How long they will stay strong, that's the question. Rates were higher. Look at the rates spiking up within range on the 10-year. 30-year also was up. AD lines, the white being the AD line, yellow being the S&P 500 on both the smaller stocks and the larger stocks hitting new highs. If I look at the AD line on the NYSE, these are the major market ETFs. In green, the diamonds. In light blue, the Qs. In orange, the IWM. And in red is the transportations. All of them are pushing it at all-time highs. Here is the TLT, which actually turned down. When I look at breadth, you can look at stocks above the 200-day moving average, stocks above the 40, certainly in the higher aspects of the range, but not the highest. So they're strong, but not so overbought that you expect a reversal. If I look at the 3-month new high, new low, this has been really good at showing reversals when you hit the top, and we moved up some. We're still far away. And the daily and weekly McClellan, maybe some zero-sum reject from the upside, which would say we go higher, but really not giving me any extremes. I look at the buckets of the S&P 1500 to understand how overbought or oversold the markets are. Remember, the S&P 1500 in the Bollinger Bands, you have a midline. Here we have 59% above midline, 41% below. That's bullish, but not overly so. Then we look at the buckets. I specifically look at stocks above and below the Bollinger Bands, and there are very few. So I would say we're shifted some to the right. We have a bullish pattern, but certainly not an excessively one. Okay, back. Sorry, step away for a second. No evidence of a Hindi. Now, what's interesting, if you look down here at the number of NASDAQ stocks at new highs, it's really dropped a lot. It's only 2.3%, almost done at new lows. And if you look at the NYSE, on the other hand, 4% at new highs. So NYSE stocks perhaps rotated in, NASDAQ stocks perhaps rotating out. Regardless, no evidence of any danger there from a Hindi's perspective. Market tone, choppy to trending towards bullish, certainly not a rip-roaring bull. And from a sector strength, the utilities remain the weak. Now, canaries, interesting. Last week, I think I put poised to break out. And unfortunately, they failed. And what we have here is 1, 2, 3, 4 times failing at the same level. So we are in an interesting triangle-like formation here. And it'll be interesting to see, do we break out to the downside or do we break out to the upside? That's pretty strong resistance here, and that might be a bearish sign of things to come. The Scott Index, which is a broader index that I put together in June of leaders at that time, interestingly, it's consolidating right here on the 50. Could go either way. The weekly bongo is red. That's negative. Know your news and earnings. One might expect on a holiday shortened week between Christmas and New Year's not to have a lot of news. There's not a lot of Fed heads speaking. Congress is not in session. The tax cuts are signed. You'll have governors coming out complaining about them, especially if they're in high tax states. There surprisingly are some earnings this week, and they're listed here, at least a couple. Nothing that jumps out as being that important to me, but obviously I do have some Greenbrier, at least I do today. We'll see whether I still do when we get the day before earnings. Judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Market thoughts. I thought they showed fatigue going into week's end, but still close to the all-time highs. Market rotation remains a story, not market breakdown. Blockchain mania turned ridiculous before Bitcoin pricing rolled over, taking the latest buyers with them. Turns out it's easier to buy than sell Bitcoin. I've heard some folks that have limits of $300 to $600 per day that they can take out of their Bitcoin. Buying something in mania in an unregulated fashion, not always ending well. Some of the stocks were funny, like Longfin. We talked about on my Thursday webinar, and I said all these things end badly. They started ending on Friday. I didn't think it was necessarily over on Thursday night. So it's the last week of the year. Expect low volume, few earnings reports, little economic news. Tax bill winners and losers likely to sort themselves out. Those with a big Fed tax rate in 2017 and earlier are likely to be a big winner. Great week to reflect on our 2017, our gains, our losses, as well as some great people we lost. Next year's unlikely to be a repeat of the low volatility year that we are finishing, yet many find higher volatility an opportunity to make more money. Happy holidays. Thanks to all for their support of these webinars, and special thanks to the live and online attendees of my December seminar. And for December seminar attendees, look for an invite for January 4th, the final scheduled web session. We'll answer your questions and review seasonality plays for January and how I might play them. Typical top-down agenda, and let's jump into the charts. I always like to go into TradeStation just to get a sense of what's going on with some of the major markets. Sometimes they all run together, so I know what I said on Thursday, but let's just look at the E-minis. E-minis I thought were at risk of slowing down. You've got a couple of things. You're still in a buy signal, bi-weekly and bi-monthly. You're blue, green, and green, so you got a little bit of weakness there. These red dots on the weekly and on the daily charts show symptoms of divergence, and the MACD histogram has gotten a little bit lower despite higher highs, and that to me is a suggestion that perhaps the pressure on this market to go higher is abating. We're above the envelope, so it would not shock me to see this market continue to pause to refresh. The high jump has come off its highs. It's still a weekly bongo green. I don't see a market that must be rolling over. I see a market that may want to take a pause. If I look at the NASDAQ futures, I see a buy signal for person buys on the 3 time frames. Also see the blue bars and the red dots, and notice how it's come back within the auto envelope. It's also on the high jump, worked off a lot of its excesses. The weekly bond goes green. To me, it's very bullish to see a market go sideways and digest gains before the next move. If I look at the YMs for the Dow futures, MACD divergence is only on the weekly, and it's working off some excesses and going sideways to get back in. So perhaps this flag that we're seeing is some nice, gentle redistribution, some rotation. allowing the things that are overheated to take a pause to refresh. And so far, I don't see anything to be concerned about, just aware. Russell futures, a little bit less extended, so you don't see the red dots on the daily. You do see them on the weekly. And again, in a buy signal for multiple time frames. If you want to see something that's weak, you could look at the dollar, and you can see the dollar's been in a sell signal on the daily, although it's still in an intermediate term weekly buy, but a monthly sell. You notice the red bars instead of green or blue. Green bars, according to Elder, the buying window's open, you can buy or hold. Blue bars are neutral, and when the bar is red, you should not be making new long positions in this, and you should be considered being short or holding. So the dollar is the weak of the bunch, and also weak, obviously, will be the VIX. Although on Friday, it perked up some. It's still, at best, blue. It is in a buy signal, which is surprising short term, but intermediate on the weekly and monthly longer term, it's in a sell signal. All right, so I look at this, and as I said on Thursday, I continue to see a market that's strong, yet probably not overly so, and that perhaps we can continue with some industry group rotation instead of market corrections. Next step, I like to open up my designer and go down to Woodward and Brown user groups, major markets plus, and I bring up the 23 major markets that we like to look at, and then I like to rank them on top-down view, which is all price and volume, and putting more weight on recent than over the last couple of weeks, and then make sure you rank it by combo. So what do we see here? Well, of interest, silver and gold have moved to the top. Is something different there? We haven't seen that in a long time. Big stocks, especially NASDAQ 100 and the S&P, at least on Friday, lagged, and small stocks are up. Mid-caps seem to be performing better. If we open up a couple of these, we'll start with the S&P 500. And, I've said it over and over and over again, and I'll say it again now. It's been a long time since we touched the 50-day moving average, and these things don't go up forever. They like to return to free parking. So we are up near the high jump. We've come off a little bit after touching it on Monday. There's no Hindenburgs, no other signals. Super strong market. At some point, it's going to stop and refresh. The Dow Jones Industrial Average, ditto, nothing else to say. The NASDAQ Composite, ditto. And then the Russell 2000, this one has come back and touched. And I look at this, and to me, it's probably the most bullish of them all in that it's sitting right on its 50, had a positive day, had a kahuna on Friday. So the Russell actually looks interesting to me. And a lot of these stocks are also in the NYSE. And looking at the NYSE, looks pretty darn strong, looks like the others. So I put all this together, and what do I see? I see a market that is continued to be strong. I see no signals that it's rolling over, no Hindenburgs in quite some time, no Phoenix, no bingos. My weekly bongos are green. But I also recognize that at some point we're going to return back to our moving averages, especially the 50. So I am aware that corrections will occur. I don't see anything here that says it's imminent. Now, with the new year, there's a lot of folks, and I'm not necessarily disagreeing with them, that think there'll be some profit taking that we didn't see this year, especially with the lower tax rates. Let's wait and see what happens. Trade the market we get, not the one that I tell you we should or anybody else tells you you should have. We look at the dollar, it's weak, and if I drop that into a weekly chart, you'll see how it's just been pegging to this weekly 200 moving average, and it's actually closed below, and that could be construed as a low closed doji. So that looks weak on the weekly as well as the daily. And ultimately the VIX, someday the VIX will rise, and when it starts to rise, those of us that are overly to the long side will get penalized. but right now the VIX continues to be low. And I went back on Thursday and I looked at some of these spikes. These spikes are much shorter duration than the spikes were in 2007, 8, and 9. So the VIX is low. When it starts to rise, it's bad for stocks. When it falls, it's great for stocks. When it's complacency and stays low, it's sort of a neutral to me. Now, gold, weak dollar, is gold going to make it? You know, it's failed 1, 2, 3 times at this 50-day moving average. One would hope that once it can actually break above and stay above, it will go from resistance to support. But before I go crazy on gold, I'd like to see it actually go up and probably retest. And I'd like to see that bond go green. Maybe we'll get that this week. Silver, deeper in the pattern, did have a kahuna on Friday. And gold miners, which are probably in between, right, struggling to stay above the 200-day moving average. So there might be something coming in the minerals. Now, something that's seasonably weak into year end is U.S. oil. And right now, I'd say at best it's going sideways. So again, what am I seeing in the markets? I'm seeing markets that have had a long run, markets that are overdue a pullback, but markets are strong until they're not strong anymore. I don't predict. I try and be prepared, and when something happens, I try and take advantage of it. Those folks that have been going short for the last 18 months and talking about it on TV have lost their shirts. People like Dennis Gartman that 2 weeks ago said he was selling stocks is buying stocks again. So at some point, it is going to be the right thing to be short. It's going to be the right time to be in cash, playing contras. And that could be tomorrow, or Tuesday. But right now, wait till you see some evidence that it's actually happening. Don't just do things because you think the market's supposed to do what you think it's supposed to do. Next thing I do is go down to 07 industry groups. I see there's 174 of them. I look at how many have a 2-day positive force, and I see it's 53. How many have a 2-day force down? I see it's 23. In the downside, a lot of finance things, wealth management, banks, consumer finance, casinos, finance is something. When I look at the one-day performance, for the most part, the one-day performance was not much except in the wealth management index, was down 4.3. And over 5 days, only 2 groups are down more than 1% in the last week. So even though there was some weakness in wealth management, it had been up 13.6 in 5 days, which means if you take out the 4.3, that was almost 17, 18%. Steel's been strong, e-commerce has been strong, casinos. So got to sometimes be careful about one day. If I look at the 5-day down, I see it drops to 18, 5-day up, it's 73. So this market perhaps weakened a little bit at the end of the week, but it's been super strong and it remains strong. Let's take a look at what's moving to the upside. Again, make sure that the raw combo. So specialty pharma and biotech, that's kind of interesting. So in specialty pharma, you have one drug got approved and one company got taken out. This is the company that was taken out by Genentech. Let me go into my NoVSA group. So here's a company that, this was a stock that pulled back to the 50. I was not in it. I see no reason to have been in it, although you could have certainly argued back here that it was a buy coming up off the 50 over here with the PSAR change that occurred here, following a kahuna here, or a pocket pivot there. And I would have no issue if somebody told me they bought it then. You could have bought it here with a Bible gap up off the 17, but you would have been taken out. I would have been sit here and maybe on Friday, make sure I got their days right, when I saw the kahuna, but it was too late. It already got bought out and gapped up. So this stock is gone. La Jolla had a new drug approval. Couldn't hold its 50. I like to see it get above the 50 before I start chasing it. Corcept is one I mentioned on my webinar Thursday. This is one that I've been holding. I had just gotten out of it. It gets added to the S&P 600, and the stock went up 2 days in a row. Great earnings per share growth versus PE. Valiant, I mentioned this maybe 2 weeks ago. I think it's still cheap from a long-term perspective, and if you have a long-term time frame, I don't think you'd be wrong getting a position in it, but you might wait till it pulls back a little bit more. See if there's anything here that I like. Here's one that I'm interested in. Uptrend, pullback, sitting on the 17. Had a pocket pivot, a kahuna the day before. This is also a high close doji. So this is one I've been watching, Adams Pharmaceuticals. I also like Myocardia, uptrend, pullback, starting to move up again after a kahuna. That's a pullback to support, and now it's moving. Don't know anything about Voyager Therapeutics. Don't really like the pattern. I would have liked it if this business here, but it's about to break above the 50, so it's something I put on a watch list. So a lot of things here are starting to look interesting. So that's specialty pharma going back. On the biotech side, I like Array, and then we'll talk about the next one. Here's a pattern I like. Uptrend, pullback to support, did nothing for 3 months, 2 months, and now it's breaking out with a Bible gap up, mobile breakout from a squeeze, and a kahuna. I like Array Pharma, Biopharma. I talked about Exelixis on Thursday. I hope somebody heeded me, and I said this one's going higher because of a recent approval. It had another kahuna on Friday and broke out of a squeeze. I think this one can go quite a bit higher. The other one I liked was Vertex, uptrend, sideways on the 50 and moved up. I talked about this Thursday as well. Anything else on the biotech that made my list? No. I mean, something like symbol, uptrend, sideways, breaking out. This one I like as well, CBay. So there's a number of biotech stocks that have nice chart patterns. Other hardware index, I don't even know what this one is. All right, any bets that this is a blockchain company? Any chart that's done this must have had a news report 4 days ago that they've done blockchain. Let's see. If you didn't think this was a bubble, next D, cryptocurrency retail payment platform. Not about earnings, not about revenue. It's about people just buying things. This was my favorite, and you should see my TD Ameritrade, how many times I've tried to short this stock. It went public here at, let's see if I get the window filled up, about $5 a share. On this day, they made an announcement that they were buying a blockchain technology company that has no revenue from the founder. So the founder, who controls the majority of the Longfin shares, bought a company that he fully owns. And he paid about $5 million. So you look at the market cap here, and it doesn't tell you. And what happens is, all of a sudden, by buying a company for $5 million, here's the thing, on the IPO day, it traded 297 shares. Here it traded $15 million shares. And then the third day, it traded 8 million shares. High of the day, this is amazing, $142.82. Closed at 72. So there's somebody up there that bought it at 142 on a market order and is now down $70 a share. This is mania. This doesn't last, and it's already coming down pretty hard. Hard stock to short, and the options were expensive, but sometimes expensive options are worth it on the puts. So here's a stock, and they had the guy on TV on this day, and he actually is saying that his stock is crazy. He's not selling. He doesn't understand the valuation, and it still went up before it ended up closing down on the day. Bizarreness. Bubble. So this actually threw some things off. Oil exploration and production. Several of these we liked on Thursday's webinar. APC. You can take your pick. A lot of these things are starting to break out. APC. FANG a little bit. I started talking about this one a while ago back here. FANG's had a great run. Hess looked good on Thursday and it traded up on Friday. Devon, I've been playing this one. Pioneer, they all got the same pattern. This is probably the strongest group of things that I've seen. Now I'm just curious. Sometimes I want to look at seasonality. So let's look at USO. I don't know if it's been trading long enough, but let's see. So USO is currently in an uptrend, and this is sort of a range trading. And it's in the middle, let's make this, of its range, middle to lower part of the range. And it's getting into a period of time, though, from January 3rd to February 13th. It was down 8 out of 10 years, 7.4%. It still looks like it could go up right now, but you are getting into a tough time for oil. And I show you that. Another way to have looked at it would be this. An Edge Rater, where you get seasonality pretty much for free when you buy the rest of the package. So here's just a spreadsheet I made from Edge Rater, and you can notice if I go to the loser side here, that here's UCO, ultra crude oil, down 8 out of 9 years over the next 30 days, or down 7% over the next 30 days, flat over the next 2 weeks. If I look at US oil, flat over the next 2 weeks, 5% down over the next 30 days. So clearly we're going into a weak patch for oil. Now, if I look at oil over the next many months, you see a relatively flat over 50-50 performance. So it's hard to say that there's a strong period coming in for oil. Certainly is weakness over the next 30 days. I say that despite the fact there's a lot of nice chart patterns here. Going down the list, entertainment content. Been a lot of M&A discussions here, Fox and others. Big move off the bottom. Right now it's got to get above the 200. Discovery, same thing. Time Warner. These are stocks that are beaten down. Except for Fox, which looks quite strong here. It's had a big move after it broke out. 29 up 7%, so up about 20% from the breakout. Perhaps it's already gone too far. And there's the group index. Oil, gas, services. These have lagged the oil producers, and maybe that lag is coming to an end. When I looked at these Thursday, I talked about seeing Schlumberger get above the 200. It failed to do that on Friday. Rig, kind of sideways, not too exciting. And Halliburton I liked more, and it had a tough day on Friday as well, but it's already broken out. Great earnings per share growth. HP, nice, like Halliburton, already starting its run. Unlike Halliburton, it does not make money. And FTI also is broken out and makes money. So I think some of the production and these services look good. Cable and satellite. I don't get these stocks. I don't know enough about them to say anything more than what I see in the chart. And I see Charter Communication, which dropped from 400 down to 300 and is trying to come back. I think they're a winner with tax reform. They've got good earnings per share growth, but they still trade at a massive PE and don't pay a dividend. Comcast, The Comcast, excuse me, and the Liberties have nice looking chart patterns. I don't know much about them. Enough said. And I will go down the list. Precious metal mining. Tech is one that I own. It's been up and down this year. It's currently on its way up. Sort of a cup handle breakout pattern. Pocket pivots in the handle. Weekly bond goes green. But on Thursday, all these look good. AEM, gold and nickel, Newmont mining, starting to break out. And perhaps tech should be in this group with steel and raw material because it has a big ore position as well as zinc and copper and others. Cleveland Cliffs, we looked at this on Thursday. Looks like it's time to be into this. It's breaking out. Did this last year at this time too, if I remember. Last year or the year before? Let's take a look. Traded up January and February, peaked in February, and then traded back down. BHP Billiton, looks like it's running. Vale as well. Suncoke as well. So these steel producers, the raw mineral producers, the miners, they look good. And then integrated oils. And I pointed these out Thursday, and I talked about the fact that these pay some whopper dividends. Chevron currently in a nice uptrend. Lots of pocket pivots at Kahuna. Weekly bond goes green, makes money, 3.5% dividend. Exxon, similar chart pattern, 3.7%. Petrobras, little country problem, so I leave that alone. Suncor, 2.9% dividend. So the integrated oils have pulled back. They look like they're running again. They pay some dividends. The one I'm currently playing, and which I think I talked about here a couple of weeks ago, was Ecopetrol. A foreign integrated oil, pays a small dividend. I'm a sucker for earnings per share growth. And look at this earnings per share growth. And I gave it to down here. And I showed my trade to my Thursday group. But you can see it's broken out here and it's in a nice 15 degree angle up. That's a pretty nice angle up, to be clear. So I'll continue to ride it until it stops trending. So those are some things on the long side. Base metals, anything here? Oh yeah. Again, think tech, think Vale, think BHP, aluminum, and look at copper. Amazing. What a great run. Is it extended? You tell me. We've pegged the high jump. So now I've identified some stocks I'm interested. Then I usually supplement this with some scans. And as I showed the folks the other night, a couple of my favorite scans. Let's go into the smart groups. Go under Gallardi, look at sprinters, hit warehouse view. And let's rank these by combo, which is a balanced technical and fundamental, and see what comes to the top by combo. And we'll, this is the bottom. We don't want to look. Hold on a second. All right. So these should be some good stocks. This is something that Dave Gallardi put together. So this is bottoms up. So I'm not looking at much at, there's a big problem here. Hold on a second. At, what's the word I would use? I'm not looking at much about groups. I'm looking at stocks. So let's put on a price and a volume filter. So Nutrisystems, there's a couple here that are funny. So let's just look at some of them. Nutrisystems, not my favorite company, but hard to argue that it's in a new uptrend, broke above the 200 group strength. Still no weekly bond go red. I would pass, but I couldn't argue against it. Weight Watchers with Oprah, I like more. Sideways. Kahuna, pocket pivot, still in a weekly bongo, but looks like it wants to break out here. Great earnings per share growth. Burlington Stores, a great retail story. Here's why you buy Bible gap ups, although I guess it didn't meet it on volume, but nice angle of ascent since breaking out. Kahunas, pocket pivots, mobile breakouts from a squeeze can be a broken record. Talk about stupidity. They announced that they're going to be trading cryptocurrency, and all of a sudden, a stock that I thought was no longer in existence ran from $5 to 22. It's on its way back. Another blockchain story. Anything else here that looked interesting? Here's one that was picked out a couple weeks ago at my meeting by one of the attendees. At the time, I was concerned that it was range bound and had to get above the highs, of which it did like 2 days later, and it was a great opportunity to go long. And this was on the Monday after my meeting. It broke out of its range with a pocket pivots, kahunas, a mobile breakout squeeze, Bible gap up, and an uptrending bongo. That was a great buy. That's had a nice run. So I look at Gallardi Sprinters. I might go into Woodward and Brown and look at best of, see if anything there looks interesting. XPO Logistics, we talked about this one on Thursday, and lo and behold, Friday. This is what you want. You want a stock. Let's go into intraday. What you want is to find stocks that don't gap up and trade sideways. But you want a stock that you actually can see in the morning, and you could have gotten into this stock after our Thursday meeting. This bar here is 1:35 p.m. So you could have been in this stock during the day and could have gotten in long before it gapped up. And this is when we talked about going in during our call on Thursday. Yeah, what a great move. Exelixis, we talked about this on Thursday. I just talked about it here. I think this one goes higher in the biotech. Corcept is the one that had the reversal going into the index. Diamondback Energy, it's already run a lot. So there's some great. Vertex is another biotech I think I already showed you. Ran up sideways, pocket pivots and kahunas. I think this one goes higher as well. That's in the best of Woodward and Brown. I jumped down to my name. There's some I like here. 3 times big volume. You're going to get some of the blockchain garbage in here. You're going to get the long blockchain company. Next ID, those are garbage as far as I'm concerned. Smart Global Holdings. I like the chart. I wonder if this is blockchain. So you're in an uptrend. You just broke out off the 50 with a kahuna and a Bible gap up. But I always got to see, what do they do? What's the story here? Am I getting into a crypto story? All right, not a crypto story. So that's something I might want to take a look at. It's in a good buying opportunity. So that's something I would look at and notice it made a filter because of volume. And its volume was 2,440,000, and its average volume is 586,000. So that's another of the scans I like. How about pull back to the 50 with a kahuna? So we'll look at XOG. And what I'm looking for, stocks that were in an uptrend that pull back to the 50 within 1% and are breaking out. That one I don't like yet. I'm not sure I like any of these, to be honest. I don't know any of them well enough to say. Specialty finance play, interesting chart, but I don't know enough about it. Switch. Here's a stock that had a breakout, pull back to support, now broke above the 50, 2 kahunas, new weekly bond goes green. That one I like the pattern, Mercer International. I don't know what switch. Yeah, nothing there. And then I look at rising squeezing potential, PSA reversal to the upside. And these are stocks that have to be squeezing and they have to close right below the PSAR dot. And the reason why I like those, let's see, I think this one looked good. No, that one doesn't look good, is because they haven't broken out yet. Take out. A lot of takeouts in this group. Here's a stock that's been an uptrend. It's sort of consolidating here. Mobile breakout from a squeeze on Friday. The price is right below the PSAR dot. I like these because I can do one of my get on a plane trades and say, if it closes above that PSAR dot, which would be say 56.35, then I could put a buy in and I could set my buy at the low of this bar, which would be 54.40. So I'm risking $2 on a $50 stock, and I've got very well defined buy parameters as well as a stop. And I like to use this to find stocks that are not far moved away from their stop, have a clearly defined buy point, and I've had some good trades with this scan as well. And then just for completeness sake, looking at Bible gap ups, there's that Array Pharma, which I like a lot, or pocket pivots or other ways to find some great stocks. So I use a combination of top-down view and some scans. Yes, in TradeStation, I have my own thing as well. And in TradeStation, I look for my favorite scan right now is this thing called the Trilogy Scan from John Person. And it gives me some stocks that are some of my favorite buy signals. So let's just look at Buff. All right, BUFF. We got Buff and then maybe Echo. So let's go into something that's got multi-time frames on it. And let's look at Buff and Echo. Or we could look at the ones that actually I like. So let's look at Echo. So think about Echo as being in the same group as XPO Logistics. And thoughts that if Home Depot starts to buy up its own logistics company, does Amazon buy theirs? So here's a stock that's been going sideways on the daily, has a new person buy signal. This is one trend line support. Here's another trend line support. It took out John's stop, which is a last conditional change. So I have a new buy signal, a last conditional change, a stock that's been at best sideways for the last month, yet on balance volume is going up. So those three things together are a trilogy setup, and that makes Echo an interesting buy. Clearly in a weekly and a monthly, it's in a buy as well. If I go into an HGSI chart on Echo, I see a stock that's in a nice uptrend, gone sideways, had pocket pivots, kahunas, mobile breakout out of a squeeze. Great earnings per share growth compared to multiple. I like Echo a lot here, especially if there's an acquisition of its competitor by Amazon. Just out of curiosity, look at this on a weekly chart. It's broken out on a weekly as well. So I like XPO Logistics. And then the other one that I liked on this was, some of the others I liked are here. What's his name? WBT. Again, right off of support. PPS buy weekly, PPS buy daily, OBV daily and weekly going up, coming out of a squeeze. That one I liked. Here's that Array, which I mentioned I liked, looking at John Person style. And what do I see with this? I see a stock that's been going sideways, high closed doji on Thursday and a breakout on Friday. It's been in a squeeze for some time. On the volume, just turned positive. On the weekly, volume has been up. High closed doji and a buy signal, both at support. I like Array a lot. That's how I look at the markets from a top-down perspective. That's how I use some of my various tools. I scan in TradeStation, and I also like to scan in Thinkorswim. And so, for example, I might want to scan stocks that have a PPS buy signal with a improving on-balance volume. If it has a PPS buy signal, then that tells me there's a trend reversal. And if OBV was already going up, then that might be something that would be something I might want to play. So I can do scans in each of these programs and, start to look at, I don't have any high closed dojis, but I have a bunch of kahunas in this group. PT, and so let's look at L3. Hold on one second. So in L3, let me see what do we have here? We have a stock that's in an uptrend that had a new PPS buy signal on Friday, a PSAR reversal. This is a proprietary indicator from Ask Slim that shows it's bullish. This is a work in progress that was given to me by one of my attendees to play with. I don't want to even release his name except to say thank you because people will start driving him crazy for it. Here is looking for evidence of a Phoenix or Eureka or Kahuna. Here is the high jump. We're nowhere close to the top on the high jump. Here is squeeze. We are squeezing. Here's volume driving above its moving average. And up here we have a price chart with a new buy signal. And we see it closed at the top of the range. Excuse me, the buying volume was at its average. It closed in the 64th percentile of the range, up 1.24%. Year to date, it's up 29. Month to date, it's flat. Week to date, it's up a little bit. Bongo daily and weekly are green. It had a kahuna today, a small kahuna. Both the forces are positive. It's in a squeeze. The PSAR is bullish, and it just flipped. It flipped today. Pocket pivot volume for 5-day. 210 up signal, 210 EMA upside breakout. Bullish for my chandelier, which is the stop will be right here. So this looks excellent, except for the fact it's $200. I might be interested in buying this, but I'd have to buy options, and options, that's interesting. You can buy an option that is, it's not that expensive. Let's look at February. If you wanted to buy an option that was, that's it. Oh, okay. You could buy it for about $8. You can buy a 195 option. So you'd have to get to 203 to break even. Or you could buy for about $5 a $200 option. You have to get to 205. That's what it would cost to control a share. Each contract is $100. So if it was $5 to buy a 200 call, if you bought 10 calls, you'd control 1,000 shares for $5,000, and you would capture the gain above the strike price, which is $200. So if this went to 210, your options would be worth $10, and you would double your money. So to get 100% return on the stock, it would have to move 197 to get 100% on the option of the 200 option. It would have to move to 210. So, or have to move, to $210. So you can get a much bigger bang for your buck with a smaller move, but I like that as well. So basically I've gone through my top-down approach. I showed you a little bit of seasonality. I use all the different seasonality programs. What I like most about this guy is its calendar, and I could say I only want stocks with 10 years, 90% of the time positive. I like to average at least 10% of a move. 105 would be great, just unrealistic. I want it to be on earnings, seasonality. I'm going to hit, and it's looking for some that meet my criteria. And that's December, so let's look more ahead in January. And something that I'll be talking about for sure over the next couple of weeks is going to be this guy here, which is Netflix. And for the group, my group, that will be getting together with me on January 4th, we're going to talk about the Netflix trade and is it time to get long Netflix. 9 out of 10 years between January 16th and February 26th, up an average of 31.8%. The 1 year it was down less than 1%. To be clear, fair, and honest, if you look at a Netflix option, and right now it's trading at 190, and you have to go, I think, let's see, yep. You have to buy January 26th to capture the earnings. You see the implied volatility? It's looking at a move of $19 plus or minus in 1 month. To buy an at-the-money option for $190, I'd have to pay $9.45. If to buy an option that's $220, I'd still have to pay $1. So for that option to be worth anything, the stock would have to trade 31 points between now and then. These are expensive options, and they're options where even you can guess right, but there has to be such a big move for you to be in the money that volatility crush can kill you. If you don't know what I'm talking about, you shouldn't be trading options. On that note, I'm going to say goodbye. Hope you have a great week. Happy holidays. Personally, I don't expect much to happen this week. In fact, it's a horrible week to trade. In the beginning of the year, we are going to get a pullback, and I think it makes too much sense for that not to happen early in the year. I think we end the year higher than we are today, both this year and next year, though. And I think that these tax cuts are going to drive economic growth, and that's going to drive the market. But between now and then, we do have a pullback coming. I don't think it will be the end of all. And let's see if I can remember a ticker, and then I want to close on that ticker. All right, so this is the last of my comments. Here's another blockchain ridiculous story. Long Island Tea announced a change in their name from Long Island Tea to Long Blockchain Corporation. The stock closed on Wednesday at $244. It traded on Thursday to a high of $949. So that's between a 300 and 400% move. Did they buy any assets? Did they buy any new companies? Did they develop new revenue sources that changed the marketplace? Did they do something? Did they cure cancer? No. They announced that they're going to seek to acquire some assets in the blockchain world, and the stock went nuts. I like to think back to, here's a couple examples. 3-4 years ago, maybe longer, I'm sitting in a hotel room. Here we go. And I had taken a position of Plug, which you could see is a stock that for the longest period of time did nothing, not even $1 a share. And then all of a sudden, it becomes a great story. Now look at this pattern and tell me, have you seen anything like this before? It ran from $1 trading here, 800,000 shares a day, to all of a sudden trading 4 or 5 million shares a day, running up to 5 at 112 million shares a day. And we weren't done yet. We ran up to 12 at 244 million shares a day. And what happened to it? The same thing is going to happen to a lot of these blockchains. It's coming back to where it started. Now, doesn't mean it's going to never be a good stock again, but when you see this pattern and volume goes crazy and there's mania, it's $2.50 stock again. Be careful. I remember sitting a couple years ago and watching Intercept Pharma. You see how it's a $63 stock today? Let's see if I can find it. When it went in one day from being on this day right here, January 7th, on Tuesday, $400,000 shares traded, $67, $70 stock, to this day here on Thursday the 9th, 6 million shares traded, and it went from $47 to a high of $305. And then the next day, $5.9 million shares to a high of 497. Does that look like anything you've seen before? And back down to where it came from. So be careful of chart patterns like Longfin, Long Island Iced Tea, Seabird Brokerage, etc. Some people make a lot of money, but they're not usually us who are the last ones in. You all have an outstanding Christmas, safe and joyous holiday wherever you are, and we'll see you next year. Bye, everybody.